Trade management. So you need to understand that when you open a trade, okay, long or short, you've set your stop loss and your target. That's not it. It doesn't stop here, okay? You need to manage your trade throughout the duration of the trade. So how do we do this? It's basically by managing our risk. That's basically the whole idea behind it. So what I mean by that is, let's look at an example. You see market coming down, okay, head and shoulder a support level, let's say, with a nice retest. So that's the neckline. Retest, you go long. Bam, you buy. That's the MPO, which puts you approximately at these levels, right? So these are the levels you target. What the price could do is something like this, and then bam. What happens? Do you get stopped out, even though you were that close to making profits? No, absolutely not. If you've managed your trade, you would have still got some profit, because this happens a lot, okay? That's why you need to manage trades. So let's look at this in Zoom, okay, this move, and see what you could have done. So basically, so you've seen that head and shoulders pattern, okay, break with a retest, got long. That was, let's say that black line here was your target. Price went like this, made a higher high, a lower high, and then went on to break that high, okay? At this moment, let's say you had your stop loss here, you move it, okay? You move it to the previous low, okay? So they put it here. So when it goes up, makes a new low, goes back up. Now, put your stop loss here. So you're always keeping on closely to the price. So when something like this happens, here's your target, didn't reach it, but went like this. Okay, you've been stopped out here. Stopped out, but in profit, right? So you've lost that little amount because your target was not right on point. There was this little gap. But yeah, so basically that's the whole thing about trade management. And so, yeah, so you need to understand that trade management, you need to follow the price with the lows or the highs, okay? So, for example, here, if you bought there, follow the price. You see, it makes a little correction, goes back up, put your stop loss behind the correction, all right? And just following the price. So sometimes this can result in some really big profits because you were only intending to short this from here to here. You've just followed the price with your stop loss, okay? So that's something different, is if it's if you've got no target and you're following the price. But in trade management, you do that until you reach your target. However, the few things you need to be careful of is being too aggressive. So following the price, but way too aggressively, okay? So let's say you're shorted here and price is here, you already move your stop loss, okay? No, you need to give some space to the trade. Same, you see, when you've got, so that's US oil, when you've got really aggressive moves like this, corrections can be really aggressive as well. So there you could manage your trade by pulling stop losses very close to the price, especially if we've got, for example, here, little support, all right? So you could do that, or leave plenty of gap, but don't do between, okay? Don't put your stop loss somewhere like here, because that would mean if there's quite a big correction, you get stopped out at a really small profit, and you're better off just keeping your stop loss here and leaving it some space, or putting it really close. Don't be like that trader that's not really sure what he's doing, so he's doing a bit of both and putting the stop loss in the middle. Okay, we don't want that. So we'll manage our trade like this, basically. So there's a few ways we manage our trades. Is, let's say it goes down here, we could put our stop loss closer here to reduce our risk, okay? Reduce our risks. What we could do as well is when the price goes down, put it to break even. So when it's to break even, we have no risk on the table anymore, so we can just let the trade run. And the next one is putting our stop loss in profit to secure profits, really. Okay, so that's when you manage trades. And also when you need to manage trade is look at Forex Factory calendar, or I've showed you the other calendars, okay, the Daily FX and FX Street. So simply look at the calendar today. So we'll do it. So today we had some retail sales in the US. But let's say Kiwi, okay, tonight. at midnight and 45 minutes, so tomorrow, let's say we've got a trade on Kiwi dollar, or Kiwi Swiss. No, let's put Kiwi dollar. We need to manage our trade. Okay, so let's say we're long from here. All right, bought this, targeting that line. Okay, and there we see. So forget the 12:45. Let's say in 1 hour, next hour, we've got strong news on the Kiwi dollar. So you need to know, first of all, that depending on the news, okay, you need important news, so red one. And news only affects smaller time frames, so like the 1 hour and the 4 hours. But if you're trading on the daily, no need to have to manage it that close. But let's say on the 1 hour, bad news, for example, for the New Zealand dollar, we could see the graph smashing down. Okay, so what do we do in that case? Just before the news, like literally 5 minutes before, we'll zoom in into 15 minutes chart. Okay, 15 minutes charts, and we'll look at still support and resistance. So here we've got like a little support with resistance, support. We'll put our stop loss just below this. Okay, so if the news is bad and the price slams down, we get stopped out here, small profit, never mind. And if the price it's actually good news and the price goes up, we're in a really good trade, really good position. So before news, always manage your trade. Okay, and that's when I look at my trading journal, many times that's the reason why I've lost money or so. It's because I was out or so and I didn't manage my trade. Okay, I had a trade running on the US dollar and there was a news and I just let it and it went bam. Okay, and I was in profit or something like this. So yeah, but of course, if you're on a daily, like for example, I've just shorted dollar Swiss this morning. It wasn't in the last video, I've talked about it. Okay, on the daily charts today, there was some retail sales, as you see, and I shorted dollar Swiss this morning around 11, I think, around 11. So why did I open it, even though there was some news in the US just after? It's because I'm on the daily chart, so I've got plenty of space. And why didn't I manage my trade? Just because I'm on the daily chart, so I've got plenty of space. But of course, if I opened that trade on a 1 hour chart, okay, let's say I wasn't trading that large move, but was only trading that head and shoulders pattern I talked about in the previous video. Okay, so that trade, so that would have been my MPO here. See that resistance, and bang, it got reached. So if I traded it like that, of course I would have put my stop loss really tight because the news could have affected my trade. However, in that case, on the daily chart, wouldn't affect. Now, the second thing also to know is that please, managing your trade can be quite stressful because you can see it going against you, with you. So if you trade, for example, open the trade on the daily chart, all right, that's the whole move. So you're going to manage your trade around this, or maybe a bit of smaller time frame, but not too much, okay? But don't go and follow the price on the 5 minute chart, okay? And think, okay, I need to put my stop loss here now, okay? Like the next swing, put your stop loss here. No, all right? Because you're trading it on the daily chart. But of course, if you want on 1 hour, you can. So yeah, so always manage your trade on the proper time frame, and yeah, just be cool with it. Don't make it stress you, because it can be really stressful to look at it, especially when you go in a profit and goes back against you. You think, oh shit, all right. So yeah, so that's all about trade management, and it's a really important aspect in your trading in order to limit your risk and to maximize all your profits.